And I was explaining to him, much like I was showing you, that that's a high resistance liquidity run, meaning that if you look at the daily chart on E-mini S&P, you'll notice that it was primed to go higher. It's really likely to um, present that run above the previous high, that type of scenario. And all I was trying to do is capture just a small little run below the lows because I felt that that was warranted. It could have done it. And I also wanted to show him how hard it is to do a trade and trust it versus a low resistance liquidity run. So a high resistance liquidity run signature is where you have a market that has a balanced price range that it has to work through. Now, a balanced price range is generally a formidable barrier to price getting to liquidity. So now it's not impossible to navigate, obviously. I mean, you can find first profit, sometimes a second partial, before getting through a balanced price range that would constitute a high resistance liquidity run. Don't let me throw you off by saying resistance liquidity run, thinking that it's only a buy, like it can't get through an old resistance level. When I say high resistance, it's both a market that's trying to go higher but fails to get into a pool of liquidity above old highs, or a market trading low that's having difficulty breaking below to get into a sell side liquidity pool. Okay, so the way I taught the mentorship and also what you've learned in the YouTube model is that it is a low resistance liquidity run that you're hunting.